Hi, I'm Alistair McCaig. I'm a market analyst here at IG. The DAX is the leading indice for Germany, and is one of the most broadly traded indices that traders look at globally. In fairness, its popularity has drifted ever so slightly as far as UK traders are concerned. That's more down to the fact that the FTSE futures now trade longer hours. The DAX used to trade those longer hours, and there used to be a migration of FTSE future traders to DAX future traders. But now that the FTSE in the UK has synced up with the rest of Europe, that is less of an issue. But I think trading the DAX is an interesting one. It really is the powerhouse of the European Union, the German economy, and as such, the DAX is the most obvious and easily tradable inroads into trading that. And I think not just traders of the DAX, but the euro as well, keenly look at it. One of the major forces behind the German economy is actually exports, and as such the strength of the DAX does get affected more directly by the strength of the euro, as opposed to, say, the FTSE being affected by the strength of sterling. It's one of the things that traders should keep an eye out for. I guess when it comes to UK traders and looking at the DAX, the most obvious sector that springs to mind for so many is obviously the car manufacturers, the like of Daimler and Volkswagen. And obviously that's partly because so many of those cars are on our roads these days. And this really does back up the comments I made earlier about the DAX and the German economy being such an export-driven economy. Because the German economy has been tied up with the rest of the European Union, effectively due to the rest of the European Union's weakness. That's generically weakened the strength of the German currency itself, the euro now, and helped their exporters greatly. Hence the DAX has seen some really impressive performances by so many companies over the last decade. The generic weakness that has been brought their way, effectively making overseas buyers of German goods finding their products that much cheaper, and therefore export figures have been driven higher. And I guess when we look at the DAX, we look at the car manufacturers, and as poorly as they might be doing with Eurozone sales, their international sales in the likes of Asia and the US continue to boom. The volatility in the DAX can be slightly greater than that of the FTSE. Again, the FTSE is made up of over 100 companies, and the German 30 in its name, the DAX, is only 30 companies, and as such, it can more easily be affected as far as the volatility is concerned. And we've touched on this a couple of times here, where we're talking about Germany being an export-driven economy. The currency does play a considerably larger part in how the DAX performs. And on the back of that, the currency, the euro specifically, has been affected quite dramatically by a number of different aspects. Not just the likelihood of, say, the ECB announcing this week that they're looking to potentially reduce base rate interest rates later on in this year, but also by the fears over a number of Eurozone countries requiring bailouts and the likely dilution that will create to the euro. So the German economy, the DAX, does get affected by these aspects too.